Hello, traders, and welcome to yet another week. And this is our weekly market snippets. We begin by looking at what transpired the previous week or the past week, that is the last week of trading. My name is Timothy Carrier. I am your market analyst. And beginning by looking at last week, what transpired, basically, we saw just a global market snapshot and a look at specifically the US markets. We were able to see the Dow Jones, the S&P 500, and also the Nasdaq. They had a slightly bearish week because Dow Jones lost about a negative 0.2%. S&P 500 lost about negative 0.5%, and also the Nasdaq lost about 0.3%. When we look at the dollar index, at least the dollar index was quite bearish. I mean, the dollar index was quite bullish. It gained 0.42%. And when we look at oil, when we look at gold, these are commodities. And for gold, we saw a rise of about 2.6%. And this is amid the geopolitical, gold being perceived as a safe haven. So anytime we have uncertainties in the market, geopolitical tensions, last week we had the Fed again in action. So investors had to run to the safe haven, for instance, at the sake of gold. The reason why we saw a gold increase in prices. So in terms of when you look at the different sectors that we had, or the different sectors that we saw in terms of the equity market, we saw the technology sector, which showed some bit of resilience because despite the overall market softness, this sector performed really it performed relatively, we can say relatively good. The consumer discretionary, this one showed some mixed performance, and this is due to fluctuating consumer confidence, because consumer discretionary is a sector that is it's very sensitive to consumer spending. So, in terms of the central bank policies, just a recap of what we had previous week. So we saw the federal rate maintain the interest rates at 4.2 at the rate at the specified range of 4.25 to 4.5%. So their rates remained at 4.50%. And we saw Jerome Powell citing economic uncertainties and the impact of trade policies. The reason why they want to monitor that, and the reason why he said they are not in a rush to cut their rates, because they have to monitor the economic uncertainties and the impact of the ongoing trade policies. So the Bank of England, they were able to cut their rates by 25 basis points from 4.50% to 4.2%. And this was in response to slowing growth and global trade tensions. Okay. So we were also able to witness on Friday, that is on May 8th, 2025, we saw a US-UK trade agreement which was announced, known as the Economic Prosperity Deal. And we saw different key sectors that tariffs were reduced. Okay. So for instance, we saw the automobile, that is in the automobile industry, the US tariffs on British cars reduced from 27.5% to 10% for up to 100,000 vehicles annually. We were also able to see the steel and aluminum tariffs eliminated, provided conditions related to supply chain security and facilitate ownership and facility ownership, which are supposed to be met. So we also saw the agricultural sector basically also being favored. So the UK reduced tariffs on US agricultural exports, including beef and corn, ethanol. We, in terms of the pharmaceuticals, there was an establishment of a secure supply chain between the two nations, that is the US and the UK. We were also able to see the aerospace, which benefited as well, whereby the UK is to purchase up to $10 billion worth of Boeing jets. So this is a deal that, and as an investor, the key things now, the key sectors to look at definitely is the automobiles, the agricultural, the pharmaceutical, that is the health sector, and also the defense, whereby we are looking at the aerospace. All right. Then we also were able to see the current ongoing talks. They were announced, the current ongoing talks that were announced between the US and China. Over the weekend, I read an article whereby they said that they have come to a deal, which is a good deal. But that is yesterday. But now they are going to share in detail the deal itself, starting today, Monday. So this is something that we are looking. This is something that investors should be really keen looking at in terms of because this will affect, it will definitely affect the market in one way or the other. So it's something that investors need to be keen at in terms of looking at what the market is going to react once the deal is out. So for the UK US trade deal, we saw the moment it was announced, it was able to support the GBPs. So this time around, we'll be looking at maybe probably, and also the dollar was able to strengthen. By the way, the reason why the dollar closed positive for the week, right? So in terms of economic indicators, when we look at the consumer confidence, that is what we call the consumer confidence in the US is dropping. That is by looking at the index that is called the Conference Board Index, which dropped to 86%, to 86 in April, which is the lowest since COVID-19 pandemic. And this basically reflects the consumer's concern over economic conditions. When you look at the employment, we were able to see the US jobless claims last week on Thursday, which remained stable. And again, this indicates a resilient labor market despite economic headwinds. So this is something to look at keenly. All right, this is something to look at keenly. What is happening in the US in terms of consumer confidence. So if consumer confidence is deteriorating, basically it means that consumers are not confident about the economy. And this again raises the concerns why most of the analysts are looking at a possible recession in the US. Okay. So in terms of earnings report, we are looking at this week, we are looking at Walmart, we are looking at Alibaba Group, we are looking at Cisco, Systems and Applied Materials, among other major companies. So that's key, especially for those that invest in the equities market. So this earnings report basically shed some light in terms of what we anticipate, in terms of what the management are looking at to help improve the performance of the companies. It also shed lights in terms of revenues, income, etc., and also the dividends, which again can be able to attract investors into these to invest into these kind of markets. So we are also looking at different or some of the things that we should consider, especially for this coming week or this week that we are in terms of market volatility. So we are looking at the ongoing trade negotiation between US and China. So definitely once they reveal the deal, some volatility gonna come into the market. And for we as investors, that's all traders, we want to take advantage of that volatility. Okay. So like I said, in terms of the global economic outlook, again in the US, the recession risk continues to increase. Analysts have raised a high probability, have raised the probability of a global recession, and this is due to the prolonged trade tensions and slowing growth in key economies. Right. So with that, I think we can now go into the charts. We see what we have in the charts. So we can begin with the dollar index. So let's begin with the dollar index. So when we look at the dollar index, last week we had tried to look at it or to analyze it. So let's see the possibilities that we were looking at. So the first possibility that we were looking at, we had identified this level of support, and we were saying there's a possibility of the price pushing down, right? And also there's a probability of the price breaking above and pushing up. Right. So right now, what we are seeing at that particular point, so we see the price pushing, the price actually pushed up. So we didn't have a break. The price didn't continue on the downside. So we see that kind of rejection. And right now, the price opening with gaps. Of course, the reason being the US-China deal that was announced being a success on that is yesterday, that is on Sunday. So even though they have not released the details or the information in details, the agreement in details, but of course we know the market reacts to such kind of things. So right now we see the DXY opening with a gap. You can be able to see that even on the weekly time frame. So the last 3 weeks at least, you have been seeing a bullish dollar index. So we anticipate what I'm looking at is the price pushing up, and my anticipation is for the price to push up and come to around maybe probably these particular levels. But before the price does that, if you look at the technicals, what we have, alternatively, what we have here, this is the break of structure, and so this was the order block. All right, this was the order block which was not respected. I mean, which was slightly respected. The price pushed here, then retraced. So then we had the breakthrough that, and right now price trading within that weekly breaker block. So this becomes the weekly breaker block. So two possibilities: the price may either continue pushing up now, depending on maybe the outcome of the trade. Once the deal is released, the US-China deal, so we might see the prices skyrocket above. We might see prices push higher. So that's something that we shall be monitoring closely. So in case the price breaks above that point, then we shall be looking at the prices coming to that particular level. Okay. But in case you're going to have some rejection on the downside, then we might see the price pushing down. And our first point of interest will be the weekly liquidities. That is the sell side liquidities that we have at around 97.863. Right. So those are the two possibilities or the two scenarios, because currently where it is, I can say it's in a neutral stance. So we're either looking at whether the price is going to break above, or maybe if the price is going to break below. So if you look at it from the daily time frame, you can see the price now here starting to create a scenario of an uptrend. That is, we are seeing higher highs and higher lows. So if you look at it keenly, the price is creating higher highs and higher lows. And we can say that now we are, from the daily time frame, we can see the bullish sentiment. And therefore, we might anticipate or we might be seeing the price because it has created a BOS. So we might see the price maybe retrace slightly to these levels. Then we see the price continuing to create higher highs and higher lows. So that's the same sentiment we are seeing also from the 4-hour time frame. So we see the price creating those series of higher highs, higher lows. So this is it, right? So right now, what we are looking at is for the price maybe probably to retrace slightly, or to retrace slightly and then continue pushing up. So we have the gaps here which have been filled by this week. So we might see the price pushing up again to these levels even as it feels the imbalance. So that is the highest probability for the DXY. So even this week we might see a bullish. All my bias is a bullish DXY. Okay, but in case that does not happen, then on the downside we want to see the price push. Once it breaks below this level, then we might have a change of character, and then we might see price continue pushing down to attack the weekly sell side liquidities. Okay, so that's my sentiment on the dollar index. So let's quickly look at gold, which we have been riding basically for some sell. So last week we were looking at this particular level. This was the levels that we were looking at last week. So we were looking at an instance in case the price breaks above this point, then it pushes up to these particular levels. So the reason why we had this buy setup, so which was activated, right? The buy setup was activated. We saw the price break above that zone. So this was the breakout candle, this was the retest candle, and then we see price push up at around about 689 pips. So that was quite a nice move. Then we have our downside bias, which was there because we were looking at where the price breaks above and pushes up, or maybe where the price breaks below and comes all the way to this particular level. So looking at it from where it is, so this level, the price reached here on Friday. So we had also the price respected these bullish, bearish engulfing, and then we saw the price push on the downside. So today, price again opening with gaps. So we anticipate that, especially when we hear deals have been reached, and these are good deals. So this is something that we anticipate to see the market do. So we have that gap, and we might see the price coming down to these particular levels, or we may see the price push up again. Okay, now because it has created a break of structure, right? You can see that's quite a break of structure. So we either might see the price push up, fill the gap, and we'll be looking at the price coming to these levels, right? So we'll be looking at the price coming back to these levels, and whereby now we might see the price continue pushing on the downside. But our overall target, we are looking at the price coming to around these levels of 100. So we are looking at a bearish scenario. So if you look at the weekly, I mean the daily time frame, like I said, we have these gaps which might be filled. We might see the price either push up to fill the gap, or we might see the price continue pushing on the downside and come to revisit to fill these gaps maybe sometimes later. But the kind of price action we are seeing here, we are seeing a very nice double top. All right, so we are seeing a very nice double top. So this now is our neckline. So where we are targeting the price to come to, this is our neckline. And the moment we see the price being able to break below this neckline, right? Once we see the price being able to break below this neckline, so we are looking at this kind of a scenario, a break above, below that neckline, then we shall see a retracement or a retest of the neckline, and the price will push down, and we will be targeting the price to come to around 30,000 levels. So we have this zone 29.55, 30.54. So that's where we'll be looking at for the price coming to that particular level. So one thing that you need to know when we have this kind of a price action, then what we are anticipating is that the price can break below, right, and then retest this level. So what it means is that also sometimes you might see the price break below and push slightly deep into the zone to test, maybe probably when we have an engulfing, or like this case that we have a gap, right, or maybe an order block. So it's just a matter of watching how the price does, because from the daily time frame, this can be an entry once we have a breakout and a retest, right? This can be an entry. And remember, how we take an entry here, we have to see rejection of prices. So this is where we'll use maybe the dragonfly doji, I mean the gravestone doji. That's where we'll be looking at the pin bars. That is the bearish pin bar. That's where we'll be looking at maybe the bearish engulfing to give us a trajectory of what the market is likely to do to give us a confirmation of a rejection. So even looking at it from the weekly time frame, yes, the last week was bullish. But we see the rejection of this week, so that means that we might anticipate to see more bearish price. Of course, we want to see the price maybe fill the gap, then continue pushing on the downside. Okay, so that will be my trajectory. So we are looking at the weekly overview. But for the daily insights, every day's insight, we have the live market analysis. Make sure to join that so that we can be able to track progress. But my overall bias is for the price to come to around these levels first. So once we see a breakup bar below this level, then we'll be looking at more sales targeting around the 30.55. Okay, so that's what we will be looking at. That's what we'll be looking at. So once we have a break below, then we might see some buying opportunities. All right, we might see, I mean, some selling opportunities, and we'll be seeing the price come to these particular levels. So that's what I am looking at. So I am looking at that kind of situation. And let's look at, before we wind, let's look at the fundamentals, basically what we are looking at for this week. So today is on a Monday, so we don't have any high impact news. So we are trading purely based on technicals. But remember again, on Mondays, most of the times what happens, we have a lot of manipulation. So the best way is not to rush your entries on Monday, but to chill and see how the price reacts. Looking at the price action of Monday, that is the price action of today, and then now starting tomorrow we are able to take entries because we'll be guided accordingly in reference to today's price action. So tomorrow we have GBP claimant count change. Also we have the US CPI, which will be coming out tomorrow at 3:30 p.m. And then on Wednesday, we'll be looking at the wage price index quarter after quarter for AUD. And on Thursday, we'll be looking at the employment outlook for the AUD. And also, we'll be having the GDP data month after month for the UK, which will affect the GBP. And then we will be having the core PPI, the PPI data. It's the PPI data, and also we'll be looking at the core retail sales, which will be coming at the same time, together with unemployment claims. That is at 3:30 p.m. on Thursday, GMT plus 3. So on Friday, we'll be having the prelim UOM consumer sentiment and inflation expectations for the USD at 5 p.m. And key to note also on Thursday we'll be having the Fed Chair Powell will be speaking, and we anticipate the market to react depending on the kind of sentiments that he'll be giving. And mostly, if you look at this, he will due to deliver opening remarks at the second Thomas Laubach Research Conference in Washington. So we anticipate basically maybe his sentiments, how he is going to respond, maybe probably all to mention in terms of the U.S. Economic outlook. And this is likely all, it's intended to have some volatility in the markets. So the key things that we are following up this week, so we are looking at the US China deal, which they said they're gonna disclose the deal today because the deal was reached on Sunday, right? From the meeting that they had in Switzerland. So the deal was reached on Sunday, and that is yesterday. So today we are waiting to see the details of the deal. So again, we'll be monitoring for the UK. We'll be looking at the claimant count change. That is the core data that we are looking for the UK. And for the US, we'll be looking at the CPI data, the inflation data, both the CPI and the PPI. And also we'll be monitoring the unemployment claims and the retail sales data. And in terms of central bank representative speeches, will also be monitoring Powell speech on Thursday at 3:40 p.m. and also now the inflation expectations, which will highly impact the markets. So that's what we have for this week. And from me, I wish you a very fruitful week, a very blue week, and a blessed week. And let's meet in our live market analysis.